Buddy, it's Brian Shannon from AlphaTrends.net. Hope you had a good week of trading. Short week, just 4 days. We're closed, obviously, for the Christmas holiday. So, Merry Christmas to everyone who celebrates it. And strong market this week. We have all of these indexes that we look at back to positive year to date. Biotech snuck higher to be now higher by 2% for the year. So, for the week, the month, and the year, we're positive pretty much across the board except for bonds and the volatility index. Let's take a look at the charts. The S&P 500 came close to closing at a new all-time high. Fell just short of it. You can see here this day is where we had our closing high, and again, just short of it. But most impressively is that we came down to the volume-weighted average price off this peak and found buyers in the same exact spot as we did 2 weeks ago. Not the same exact spot, but at that volume-weighted average price, showing that it is clearly a level of importance. As you can see down here, I've pointed out this volume. I've been talking about that this week with subscribers to Alpha Trends, saying, a lot of people will say don't believe this rally because it's up on lighter volume, but only price pays, and you don't get paid for heavy volume or light volume. It's a reason to maybe look at it and say, hey, perhaps we're a little bit suspicious about this move and I should raise my stops, but it's certainly not a reason to not be long or to be looking for reasons to short. You can look for reasons to short, but we're back above that 5-day moving average. There's no reason to be. Monday we gapped lower, of course, and immediately buyers came back in. I was pointing this out to subscribers that it was looking like it's the possibility of a failed move lower. Tuesday we gapped up and reclaimed that daily VWAP as well. I was hoping we would settle down near this 5-day moving average a little bit and give us an opportunity to buy the SPY. It didn't give us that opportunity, but there were plenty of opportunities in the individual names that it didn't matter. Over to this 65-minute time frame. Again, we always look at a 65-minute instead of a 60-minute because that gives us 6 equal candles per day. We're kind of in a bigger range, 450 to 470 is what you could say. Ideally, next week we pull back, but we do have this so-called Santa Claus rally, which is supposed to be the last 5 days of December and the first 2 days of January. So, maybe because we, expended 4 days of energy getting up to this breakout point, you want to be a little bit careful, especially, again, because it came on diminished volume. But it doesn't mean short. It means raise your stops. Be aware of the fact that if you're buying up here, you're probably chasing the market and aren't putting yourself in a good risk-reward position. The Nasdaq is rallying right back up to this high end, the 400 level, where we've seen resistance recently. Monday was a little bit of a shakeout below that volume-weighted average price off of the August peak. Over to the 30-minute time frame, this is kind of what I've been sketching out. I wanted it to pull back and hold in here. Instead, it kept pulling back, which is why I don't believe in buying pullbacks, instead buying strength after a pullback. And this is kind of, I sketched this in yesterday that I thought today we would rally up towards this band of resistance, and now for next week I'd like to see it pull back down towards the volume weighted average price off of the recent high, the all-time high that is. See that flatten out and turn higher, get the 5-day moving average turning back up. I'm sorry, it is turning up, but to maybe test it and then to be a buyer somewhere in here with a stop under there. Not to be a buyer on a breakout when it's extended, to buy after a pullback begins to rally. After the pullback, once it begins to rally again. Don't buy the dip, buy strength after the dip. I will say that forever, and people can say, oh, hey, you're eating your words now, I bought the dip. Well, those are the people that have been saying nonsense like that about stocks like PayPal and Zoom and Zillow. They've been telling me to buy the dip for the last 6 months, and one day they see it rally and they do the I told you so. I'm talking about trends here, and that's what's important. This trend of the Russell 2000 has been really range bound for most of the year. This has been the range for the year. We've spent basically about 2 weeks outside of that range. This past week we came down almost perfectly. This is the anchored volume weighted average price handoff technique that I talk about. We had a point of control here where the market reversed from the COVID low, and then as it pulled back to that volume weighted average price and rallied again, we anchor a VWAP there. it tested that volume weighted average price, and we hand one off here again at this point. I just did that incorrectly. Hand it off right here. And look at what happened. We came right to that volume weighted average price, and very similar to this handoff, right here, the buyers regain control, the buyers regain control, and yet again the buyers have regained control. Now we're up to this conjunction of the 20, 30, and 40 week moving average all crossed, all closely huddled together in here. Of course, that's where we also see right now this thick blue line, which is the year-to-date volume weighted average price right there. And on the 30-minute time frame, we're also right up against the volume weighted average price from the peak. So you have to ask yourself, where has this market come from? It's just come from 210 to 212, about 5%, 6% here in just a few days. Where does it have the potential to go before it's likely to encounter a source of supply which might act as resistance, a level of interest that could slow it down? We're right there. Last time we touched the volume weighted average price off of the peak, it reversed. Now we're back at it, and we're at the volume weighted average price year to date with the 200-day moving average right above. So the question is, does it make sense? Does it look like we're in a low risk, high probability area to be a new buyer of the Russell 2000? Or do you think it's more appropriate to look for a purchase if it does this first and then begins to rally? We get that 5-day moving average heading higher, then to be a buyer in here with a stop underneath whatever that higher low might end up being. Make your analysis anticipatory. Think about the potential scenarios. Where has it come from? Where does it have the potential to go? It's come 6%, has the potential to go right here to this volume weighted average price. Doesn't mean it is resistance. We'll only know after the fact. Maybe this thing goes right straight up to 240. I doubt it, based on the cyclical nature of the way that money flows through the market, but it could happen. I'm not interested in the fat tails of what could happen once in a while. I'm more interested in what typically happens. What's more typical is a pullback here and then perhaps to be a buyer on the way up. Anticipate, don't react. Semiconductors had a week where we saw this important level of support was broken. Buyers stepped in almost immediately that day. Monday, they gained control by the end of the day. Tuesday, we gapped higher. This was a perfect example of gapping above the 5-day moving average and then getting involved as it's back above the volume weighted average price for the day. That's something that I've mentioned several times on Twitter. And by the way, if you're looking at this on YouTube, if you're not following me on Twitter and you just wait for these videos each week, you're missing a whole lot of content that I put out on Twitter each and every day, and I suggest you go over there and follow that. Anyways, semiconductors are in a wide, choppy range in here, but we've had some good action. Just yesterday, I purchased shares of AMD at $143 per share. Basically, I was looking for it to pull back to the prior day's volume weighted average price. So let's take a look at that. This was yesterday right here. I was looking for it to pull back to this volume weighted average price and then buy it above the daily VWAP. That occurred at 143 is where it was purchased. I took a third off today to reduce risk because that's what I always do. But we're back above the volume weighted average price off of the peak. We're above the 20-day moving average. We're above the 50-day moving average. I've reduced risk because risk management truly is job number one. It's just not a motto or a phrase for me. Biotechs remain garbage. They're at a declining 50-day moving average. They're probably, here's what I think. Here's the potential bullish scenario. They run up towards that 200-day moving average of the year-to-date VWAP, come down, create a higher low. Everyone will get excited because that's an inverted head and shoulders pattern. By that point, let's say that occurs in 2 or 3 weeks. If it occurs in about 3 weeks, we'll be getting rid of this data for the 50-day moving average calculation, which means it'll be flat to rising, and then perhaps getting back above this level, we're in a position for buying into next year. But right now, it's just not. The odds aren't there. Let's talk about Bitcoin, because this acted just great this week. On the left, I've got the daily time frame. And over here, I've been talking about the volume weighted average price year to date. You can see in the last week and a half, we've tested it 3-4 times perfectly, and buyers emerged each time. So over to the 2-hour time frame on the right hand side, each one of these candles is 2 hours. I had pointed out last night right here, right at this point, that the buyers, that we were at the volume weighted average price from the low of the last test of that year-to-date VWAP, and we were also holding above the volume weighted average price from the crash low. It came up to the volume weighted average price from this peak, and these are levels I had pointed out in advance on Twitter. This isn't hindsight analysis. I had posted a chart right when it was right exactly at this point right there. I had posted again right here saying it looks like it's getting ready to break this level, and now it seems to me highly likely that it's headed up towards this 53.5, 54 level. We not only have the volume weighted average price all to the all-time high there, but we also have just above at about 55,000 the 50-day moving average, which is declining, and this black line here is the volume weighted average price off of the previous low. So this comes together as a level of interest where it's likely to see some supply for this move here that we're currently experiencing in Bitcoin. What else do we want to talk about? I guess we're going to talk about the financials. They kind of seem like a waste of time to me. They got below this trend line briefly. Here's the trend line off the peak. So this is kind of a triangle forming in here. The primary trend is still higher, but they're digesting gains right at the 200-day moving average. So maybe that's something that can rebuild here in the next few weeks as this range tightens up. But there's no reason to be involved when it's in this choppy range. That is, and when I say no reason to be involved, if you're already involved in it, that's great, but no reason to commit new money for a swing trader, which is the time frame that I'm involved in. I'm going to get together some January effect names, and I don't know what I'm going to do with them. I know I'll definitely share them with subscribers, but if you're on YouTube and you like this video, share it with your friends, retweet it, make a comment, like it, subscribe to the channel, all that stuff. Merry Christmas, everyone. Thanks for tuning in.